Welcome, everyone. We're on week 10, the last week of the Area 54 class. And tonight we will be doing our course review. So we've gone through 11 chapters. And hopefully you've enjoyed the class, and it's been helpful for you to help, if nothing else, give you structure for your studying. So tonight, the plan is to really go over, test taking strategies, as well as what is the key elements in each chapter that you should probably be focusing on. Obviously, there's a lot of content that we covered in those 11 chapters, but of course, there's some information that's a little bit more important than others, and what you should probably expect on the exam, at least to be prepared for that, and how to think about some of the questions on there. So, so test prep strategy, right? So a couple things to keep in mind. The exam is 75 questions, and you have 2 hours to complete the exam, and you have to have a passing score of at least 70% or higher. So what does that mean? That means you can basically miss 22 questions and still pass the exam. While, of course, I want you to, understand all the content. At the end of the day, you're most likely doing this course because you want to pass the exam, and you want to do it on your first time. All right, so 22 questions, 75 questions. What does that also mean? It means you have about 75 seconds for each question. So a little over a minute you have to on each of the questions. In general, numbers may have changed the numbers on these, but typically you can expect 53 questions that'll be simple or core questions, and then 22 applied questions. So what does that mean? So when we talk about simple or core questions, it means that they're going to give you a definition, and they'll say this definition describes which of these things, right? And there'll be a list of typically 5 answers that'll have in there, and you got to pick the right answer. Many cases, it's fairly straightforward. There'll be some questions that you can pretty much go through there without any problem. The applied questions means that they're going to give you a hypothetical. They're going to give you some background information. So if you think about, and during the course, we had the case studies. That's what you can expect on the exam. It's going to give you some case study information, probably a lot of information, and they'll typically ask about 5 questions on each of the different case studies, and maybe 4. So you're going to probably 5 to 4 questions on each one. So expect about 5 case studies in all. Now, the good news is that the questions don't build upon each other. So when we talk about like math questions or things like that, you will have some capital market type equations, or to be able to do net present value, but the answer to one is not going to lead to the other. Now, couple, again, some strategies here. Read each question very carefully. Don't rush your understanding, right? What I typically find is, and I've done this myself, is that I've read the question really quickly and I didn't read it the right way. And sometimes it can be, the question will be, all these are examples of XYZ except for, right? And so you're looking for the except for. Or there just might be one word in the way the question or is worded, and written out for you, that it actually changes the meaning. So just read each question very carefully as you go through. So the other part now is, because this is a computer-based exam and you do have a time limit, and again comes down to strategy, you want to answer all the questions Well, that sounds pretty obvious, right? Yeah, of course you do. But what I mean by that is that go and answer the questions that you feel confident in. And if you don't know the answer to one, you're kind of, might be 1 or 2, go ahead and mark that question to go back on. The same thing, or maybe you do, maybe it is a question where you think it's this one answer, it could be the other one. You go ahead and answer it and then mark it. So at the end, you'll have time to go back. The reason why I say to, if nothing else, answer the question and then mark it is because unlike the SAT or other exams, it doesn't hurt if you have a wrong answer, it's not any more points, but you want to make sure you answer every single question. And I'd rather have you guess at one to try to get the points for it, rather than leave a question blank. So as on there, you see on there, mark the questions that you're not 100% are correct, right? If you're not completely sure, go ahead and mark it so you go back. You don't want to mark every single one though, right? Mark the questions that you skip. Even though on there it'll say you can go back to any unanswered questions, you want to make sure you don't leave any unanswered either. eliminate wrong answers to a 50-50 chance. In most cases, you'll probably be able to reduce the question or the answers to one, or it's going to be one or the other, right? That's at least better than 1 out of 5 if you can reduce it to that 50-50, and then take a guess if you're not completely sure on some of those. The other part, for those that haven't taken tests in a while, it's one of those things where it's the most correct answer. There'll be a couple on there that they're really close, and it'll make you think, well, it could be either one of these. And unfortunately, there are some, what I would say, bad questions that are like that. When I've seen those in the past, I've actually, emailed the institutes and regarding that one particular question, if I could remember it, to have them take a look at it, because it may not be worded appropriately for that. Again, answer every question. And as usually, gut check, your first choice is usually the correct answer. Don't overanalyze. I think most people, when they start looking at this, if they haven't taken a test in a while, they start overanalyzing it. The questions on here are really intended, they're not really intended to be trick questions, but they're really trying to check your knowledge at a high level, at the 50,000 foot level, of what would you need to know as a risk manager? What would be most likely the correct information as a risk manager to some of these questions? Now, the other part on here, obviously from a studying standpoint, what I encourage you to do is study each chapter by doing the following, right? Read your learning, the objectives. So the key learning objectives, all those things that are at the very front of the chapter, the things that we start off each section with, whether it says explain, trying to think of some of the words, analyze, those type of things. If it says calculate, you need to calculate. But all those things that are right at the very front of those chapters, the learning objectives, are really going to be what's on the exam. That's what they're developing the questions for to test you on. There's typically not going to be a question that doesn't relate to those learning objectives. So you want to do that first. Then the other thing I recommend, besides obviously reading or listening to the videos, is go ahead and actually read the chapter summary. So as you're studying, go back to the chapter summary. If it's repeated here, it's most likely important enough to be on the test. So if you look at the objectives and then you read the chapter summary, it kind of says that's your bookends. And that's really what they're most likely, that's what they're focusing on, are the key points. And you want to make sure that you review those elements that you don't fully understand. I do encourage making flashcards of keywords and phrases. If you do a Google search, you can sometimes find some online flashcards that you might be able to use for 54, at least I've seen some, and you could do it that way, or just doing the traditional flashcards. I do believe that the Institutes, as part of one of their packages, also provides flashcards, but really what you're looking for are the key definitions is probably one of the areas that you want to do flashcards. And last thing on here is think big picture, right? My experience, and unless they've changed the exam anytime recently, they're not going to be asking for what was the date on such and this was passed, or those type of things. When it comes to Basel or Solvency II and some of those other types of things, they're not going to be looking for real specific information. So what you want to think about is at the 50,000 foot level, does this make sense? What was really the intent of the objectives? And think about that when you start taking the exam. Now, what you're seeing on the screen here is what you'll eventually get. And I show this for the reason of how you want to study or what you should be studying. So this is a student that was nice enough to send me their results. And you can see, congratulations, they passed. There's really, I don't know about other grades other than good. You either pass or you don't pass. And in here on the exam score, you'll see that they passed with about an 80 to 89%. So it gave them that as the score which they passed the exam. Now, if you look on here, each chapter, there's questions that they answered so many, and you can see they pretty much they aced chapters 1, 2, 3, and 5, and 8 and 9. Didn't do so well on chapters 10, which is dealing with the capital investment and doing the net present value stuff. And I think, I forgot chapter 6, what that one's on, but that's the other chapter. 6 and 10 are typically the chapters that people struggle with. Now, even though they bombed these chapters completely, they still passed with a fairly good score, right? An 80 to 89%. And reason I show this is that you can totally bomb chapter 10 with people that don't like the net present value and do the calculations, or another chapter and still pass the exam. This is also the other reason why I mentioned during the course that it's probably better to take all the exam at once rather than doing the segmented exams. You know, when they do segmented, which is, you know, chapters 1 through 4 or 5, 6, and 7, and the last segment includes chapter 10, which means you still have to pass it at 70%. So if you bomb chapter 10 in a segmented exam, you will not be able to pass. So hopefully that makes sense, but that's part of the reason why I go over this. Also on the exam, after this, they also send, showing you the graphic, they will also send you a little more detailed about the specific educational objectives that you answered the questions wrong. They're not going to provide you the questions, but they're going to provide the educational objectives in which you may have not performed as well on there. The other thing about on the exam, for those that have not taken computer-based exam, what your experience will be is you'll take the exam, the questions, they'll give you a whiteboard, maybe a piece of paper to be able to write down, to do your equations or, you know, write little notes. They typically do not allow calculators in the exam room. You cannot bring your own in. They may provide you one that is a really basic calculator. And as you go through the questions, you have a tutorial. At the very end, they'll see if you want to take a survey regarding your testing experience. And then after that, it'll say, do you want to submit the test? And immediately after you hit that submit key, you will find out whether you passed the exam. It'll be that quick. And then typically 2 to 3 days later, you'll get your results by email and a PDF essentially showing your exam results by chapter and performance there. As far as scheduling the exam, now on here obviously it shows 2017. I just show this for example purposes of how this basically works. Again, 75 questions, 2 hours. As of the last 3 months, the pass ratio for ARM 54 is about 69%. This is actually the lowest pass ratio of any of the ARM series of courses. 56 typically tends to be the easier of all the exams. The good news, for those that are looking to meet ARM 57, you will be, the 54 and 57 are actually very similar. It's the same content, so you'd actually do very well typically if you end up deciding to go that route. Exam fee, this may be old on the prices. I know that they keep on raising their prices on some of these, but if you do an institute's approved site like on-site like an insurance company, they may be hosting, it's only $175. A Prometic testing center is about $207, and that's if you do early registration, and it's $276. They charge a little bit more if you're a late registration. The reason why they do the exam windows is that it's essentially it's really, I think, a money thing. The earlier you decide that you know you're going to take your test, the lower the price. But if you decide right now that you want to take your test within the next 2 weeks, you're going to pay a higher price. But you can take your test anytime. It's just how much are you willing to pay to take the exam. If you feel for whatever reason that you're just not ready and you want to cancel or delay it, there is a cost of transfer. It's about $100 that they'll let you continue to do it, but you have to pay another $100, $115 to be able to do that. All right. So a couple things on the test prep strategy. Applied questions address several chapters based upon a scenario. So I did cover that there's the applied questions. I think I said 22 applied questions. But in those case studies, they might take information. It's not just going to cover chapter 10. It's going to cover 3 or 4 chapters, and they're going to ask questions relative to that case study. You do want to memorize formulas. Write down the formulas on a paper as soon as you start the exam. But they do provide the tables. It says were not provided as part of the exam. I've had people have experience at different centers where the tables may not have been provided by one type of testing center. They are supposed to be provided. Typically, there's an appendix tab or a table tab when you take the computer-based exam that you'll have access to. I encourage you, as when you start doing the tutorial, to take advantage of that tutorial time to actually make sure you identify where all the tables are. As I mentioned about memorizing formulas, as soon as you get in, these formulas of the net present value and those type of things that you're trying to keep in your head and you don't want to lose, what I do is as soon as you start, they give you the piece of paper, I would just start writing down the formulas so that you don't forget. And again, typically the questions are going to be fairly simple. You should be able to figure these out without a calculator. Again, if you can fail an entire chapter of questions and still pass the exam. So with that test taking strategy, we'll go through what do you need to make sure you study. All right. So chapter 1, the way back when we started the course, we talked to us about the introduction to risk management. And back then we talked about some of the definitions of risk management, mainly focusing on ISO 31000, COSO, and some of the RIMS definitions that were part of that. Now, if you remember back then, as part of the environment, we also talked about kind of the quadrants of risk management. And within there, we talked about hazard, operational, financial, and strategic risks. And it's important to understand those 4 quadrants and what is considered hazard, what falls into those different categories. And we'll show a slide on the quadrants here that will help you memorize that. One of the focuses on chapter 1, one of the educational objectives, focused on what are the benefits of risk management to organization and to the economy. And so those are page 1.7 to 1.13 in your textbook. And so for chapter 1, those are some of the things you just want to make sure you know. Typically, anything that's in a list that's bullet points, in this case, it's whatever the 4 or 5 things that are listed, you will have questions, most definitely, about the benefits of risk management to the organization, to the economy, and how they might differ. And usually there's somewhat of a compare contrast question. So you do want to make sure you study that portion. Risk management goals. On page 1.14, there's a list on there that you want to take a look at. And again, that's an area that you want to focus on as well. Some of the measures, when we talk about definitions or things you want to maybe make flashcards for, and what are some of the areas that you'll probably have some definition questions of on the exam. And so the basic measures you most likely see on the exam: exposure, volatility, likelihood, consequence, time horizon, and correlation. And those are the basic risk measures. And you might get a question saying, some of these are the basic risks, all these are basic risk measures except for, and it'll list all these things, and you need to put, they'll have one that obviously it's not on the list, and so you'll need to identify which one is not a basic risk measure. The types of risk, right? When we talked about the types of risk, there's the table, and I think I put this in the slide deck here tonight as well. Pure versus speculative, subjective versus objective. And there's typically always a question on there saying which type of risk is the most insurable, right? And so it's going to be classified as a pure, objective, and diversifiable risk would be the best insurable risk. Now, one thing I didn't include in the first slide there, and this is because when they did the revision for the 3rd edition, they added information about big data. So this is something new that they did add to the exam. And really what they're talking about, the objective was how's big data transform the risk management environment? And so they've essentially did a figure in the book that really kind of outlines what most likely the question you'll see on there. And so part of when we look at big data, you have to have data capture. How are we collecting data was really what the textbook was talking about. We now have Internet of Things, we have sensors, we have Fitbits, we have cameras, all these things now we're able to collect data that we weren't able to do before. The other big, how data is transformed is we now have data storage, right? 20 years ago, we didn't have cloud computing and blockchain. Everyone had their servers, you had limited capacity, but now with cloud and data storage or cloud computing, all that, we can actually do so much more to basically be able to analyze data. And then we go to the next pieces, which is data analytics. Besides actually having business intelligence software that we had probably about 10 years ago and we used it, now with the analytics, now we're talking artificial intelligence and machine learning, that essentially we can train the computers by using artificial intelligence to actually help us do that data analysis. And then the last piece is that traditional risk management decisions are enhanced through the insights that's derived from this big data. So our ability to make better decisions, and that's actually the key phrase there is decisions, right? To be able to make those decisions, because we are able to capture more data, we have data storage, and we have the analytics, that's how it's transformed the risk management environment. So almost all the graphics that we went over, I think I mentioned the very first class, anything where there's a figure or something like this that you're seeing on the screen, it's a or a chart, there's a reason behind it. And it usually, if you can explain what that chart is trying to tell you, you'll do just fine on the exam. And typically you will have questions that'll be derived from the charts, again, because those are ways that they can explain the information. This is the classifications of risk that we talked about earlier, right? So down here it says insurable risks are generally classified as pure, objective, and diversifiable. Again, when we talk about risk, a pure risk is a hazard risk typically. That means it's more of an insurable. Speculative is more of a merger acquisition, those type of things where we're trying to make money. But a pure risk that's objective, right? Meaning that we can't influence the results. We can't influence the weather. We can't influence whether an earthquake occurs, right? It's objective and it's diversifiable, meaning that we can spread that risk around, that if we're going to insure homes, we're not going to insure all the homes in San Francisco County. We are going to insure homes all throughout the state and all throughout the country to basically help that's diversifiable. So a risk that's pure, again, a hazard type risk, it's objective. We can't necessarily influence the results, but we can diversify the possibility of that risk occurring, is really the most insurable risk that we would want to take a look at. Subjective risk, meaning typically, even the subjective would be workers' comp. Someone can decide to make bad decisions, things like that. But again, is somewhat diversifiable depending on the industry and things like that. And quadrants of risk, right? We talked about this also in the first slide that we did for chapter 1. And you just want to make sure you understand what are some of the areas that fall under hazard risk and what a hazard risk is. This is actually one of my favorite slides because you will definitely have a question associated with this, and there's just so much information on it. It defines what a hazard risk arises from property, liability, or personnel loss exposures. And then what are some of the risks underneath that? Property, legal, personnel, and consequential losses. Operational deals with people, IT, processes, all those type of things. And it's above the line, it's considered to be a pure risk. Whereas then down here, we have our market or financial risk, rise from the effect of market forces or financial assets, different risks that fall under their market, credit, price, liquidity, speculative, right, economic, and all these things we talked about, right, over the course of the last 10 weeks. The other aspect on chapter 1 is the theoretical pillars of ERM. There's a small little segment on that. The main things you really make sure you want to understand on the pillars that they talk about. Interdependency, which means really there's no silos when you talk about ERM. Correlation, that essentially risks are correlated, which basically increases your risk. And then the idea that there's this portfolio theory that you have a combination of risks, that all organizations really have a portfolio of risks that they need to take care of, and all these things tie together. So the theoretical pillars of ERM will typically be at least one question dealing with that, and it's associated with one of these about defining what interdependency or what that really means as far as that. All right, so a lot of information on chapter 1, right? That was the very first chapter. Chapter 2, this is when we talk about risk management standards and guidelines. I actually put a little bit more information in this slide than I had in previous, and partly because since they did update the standards, I think there might be a little more attention to this chapter. So understanding some of the common elements of the standards on page 2.4, that is that chart or table that lists the various standards. And I think it gives a brief description for each one. And that's a good chart to take a look at to make sure you understand what the difference is and what are the common elements of some of the standards. And I've also listed some of those on the other page. On 2.5, it talks about the risk maturity model. And part of that from the objectives is how do you measure where your program is successful, where it's at. And typically, the answer is going to be a risk maturity model. And it talks a little bit about RIM's risk maturity model as being an example of that. You want to make sure you know the definition for risk management framework and risk criteria. That's one of the main discussion items in there. And then from a standard perspective, if you, on the objectives for this chapter, it talked about being able to explain how an organization could implement and improve their performance by implementing either ISO 31000, COSO, and then lastly, talk about Basel and solvency of some of the performance objectives. So for ISO 31000, it's three main elements, are the principles, framework, and process. Within the process, there's the risk assessment, which would include the risk identification, risk analysis, and risk evaluation. And once you've done that, then you treat the risk and you monitor and report the risk. They do have, I believe that there's the updated figures that you may want to take a look at as well for the ISO 31000 when it talks about this. On COSO, their update is called Integrating Strategy with Performance, and it has the following 5 elements: governance and culture, strategy and objective setting, performance, review and revision, and finally information, communication, and reporting. So when you look at this chapter, when you look at studying, most likely you'll probably have a question dealing what are the 5 elements or one of the 5 elements dealing with COSO, or be able to explain it. You don't need to go in a whole bunch of detail in this chapter. Again, the 50,000 foot level, because almost all of these are fairly similar, right? And they're all tying to objectives, right? As far as how you want to look at your risk and the uncertainty or the effective uncertainty of achieving objectives as part of that. The other 2 discussion points that it talks about are Solvency II and Basel. Now, typically, they'll ask a question like which one deals with insurance or which one deals with banking. And what I just try to remember of all the different standards, that we're not that familiar with in the United States with ISO and COSO, but Basel, B, stands for banking. And the other one, solvency, is insurance solvency. Just kind of think of it that way. There is a question about how you would apply Basel II, what it kind of looks at. And so I did include in there a screenshot of how it would be a Basel regulatory standards might be applied. And if you look at this, it's very similar to ISO in many ways. Identify the risk, measure exposures to those risks where possible, ensure, in this case, it's talking more about effective capital planning, monitoring, right? We're doing Basel for banking, so that makes sense. You want to make sure you have capital. You want to monitor risk exposures and corresponding capital needs on an ongoing basis, and then take steps to control and mitigate those risk exposures in the reporting. So we talked about the last piece of reporting and monitoring and implementing. So, again, when we talk banking, it's usually capital assets or capital needs, and so that's one way you want to try to remember that as well. On the first I mentioned on the other slide here, the understanding common elements of standards on 2.4. This is basically the common characteristics. All of the standards, when you look at the list, they're based on an enterprise approach, right? It's taking away the silos. There's emphasis on value creation, especially in ISO. There's very much an emphasis on value creation. Integration of ERM with existing processes. You're not reinventing the wheel. There's an emphasis on cultural factors. They all stress the importance of defining a risk appetite, require risk documentation when assessing risk, stress the importance of risk communication throughout the organization, and require monitoring. So again, anything that's bullet pointed within the textbook, that's really good opportunity for them to ask a question regarding that. Chapter 3, we covered hazard risk. So if you remember way back when on chapter 3, the categories of hazard risk are personnel, property, and liability. Now, how we measure risk in each of these categories is pretty much the same. We always look at frequency and severity, right? The frequency, how often is it going to happen? And when it does happen, how bad is it? And so that would be typically you'll have a question asking about which one deals with the number or frequency, and you just want to make sure you understand the difference between the two. As far as managing risk, there was a quick discussion within the textbook. The way you can manage risk, you can avoid it, right? You can just not take on that activity. Then there's separation and duplication. Separation would be, keeping your plants or your offices further apart from each other. So if one office had an issue, it'd still be running. You can still operate, right? Or a distribution center. And there's duplication of having duplicate equipment or having plants that do duplicate operations. So if one does go down, so that's where there might be a tiny similarity between duplication and separation. The challenge is duplication is typically more expensive because you might be having an asset sit idle and it's not actually being income producing, and that was also part of that discussion. Diversification, right? That's just like with stocks. We want to diversify our operations. We don't want to be, as well as suppliers. All those type of things can be part of managing risk. And then prevention and reduction. Now, usually there is a question dealing that kind of defines prevention or reduction and really what the difference between the two is. Prevention is we prevent, I'll use shoes for crews, right? Or slip resistant shoes. If we prevent someone from slipping and falling, we automatically prevented the frequency. We don't have a frequency effect by preventing it. Now, whereas sprinklers, sprinklers, for fires, it doesn't necessarily prevent the fire, but it does reduce the cost of it. So that's a reduction technique. So that's how I hopefully helps you define the difference between prevention and reduction. The different causes of loss that were discussed, morale, physical, and legal hazards. Probably wouldn't expect too much of a question on there, but that used to be something that they did focus on. Types of exposures, right? Each of the personnel, property, and liability all have potential exposures. There's property, liability, personnel, and net income losses, right? So you can have hazard risk, which deals with those, but then there's also the types of loss exposures dealing with that. And each one of these typically has an insurance coverage and type that goes with it. On chapter 4, we moved on from hazard risk and discussing operational, financial, and strategic risk. And as part of operational risk, remember, if we go back in these quadrants, that's really what we're doing on those risk quadrants. Operational risks includes people, process, systems, and external events. Part of when we look at operational risk, we should have risk indicators, a KPI, and a KRI, a key risk indicator. Key performance indicators and key risk indicators. There's usually a question about lagging or leading indicators, right? Which one, and which one's more advantageous. And really, we want to have leading indicators is what we want to focus on. And with an operational risk, we need to have risk control. On the financial risk, be able to understand market, credit, and price risk. There's usually a question dealing with the definition of all those, the market, credit, or price, saying they'll give a definition and saying which one of these describes, is this being described, and you'll have to answer whether it's a market, credit, or price risk. The fun part we had in chapter 4 was talking about value at risk and earnings at risk. There will typically be a question dealing with the chart that we did on the homework that talked about, when you have, was it 10% value at risk that you need to add up, right? So if the first one was 1%, it's at 200,000, and then at 3%, we're at 300,000, and then another 5%, or 2, 3, and 5, that adds up to 10%. You have to add all those up together to get that, with the earnings at risk at that level. And then strategic risk. Within strategic risk, we talk about the economic environment, demographics, and political environment. I think that's fairly straightforward when we think about some of the strategic risk. Again, think at the 50,000 foot level when you think of these questions that you're probably going to have, and you should be able to answer them. And a lot of times it's just, to be honest with you, it's just common sense. When you start looking at it, you kind of think through it, you kind of go, okay, that makes the most sense when we talk about some of the strategic risks or which of the categories some of these things would fall into. Chapter 5. Chapter 5 really was talking about the framework and process, and we spent a lot of time going in detail on each one of these. And this one is good. And if you look at the chapter summary, this is what they repeat at the very end. And so this is really the focus of chapter 5, right? The 4 components of a framework model. Again, it's bullet pointed. It has 4, most likely on the exam. Lead and establish accountability, align and integrate, allocate resources, communicate and report. This will be one of those where it's a straightforward question saying, what are the 4 components? All these are components of the framework model except for is typically a question that you'll probably see. The 5 steps of the process model. Same type of thing. You're almost guaranteed you're going to have a question on this as well. The 5 steps, right? You're going to scan the environment, identify risks, analyze, treat, and then monitor and ensure. And again, if you just think of, if you don't memorize it, just kind of think, okay, what would you do if I was brought into a new organization? I need to identify the risks. Well, first I'm going to try to figure out what the environment is. What are some of the things going on? What's the competitive landscape of the organization? Then from there, and hopefully I'm going to identify the risks, see what those are. I analyze them. Once we have that list, we're going to analyze those risks. And then based upon those that are the highest, we want to prioritize, we're going to treat them. And then we're going to make sure they're working. So we're going to monitor and assure. And then some of the stages in implementing the framework and process. And this again goes through where there's a lot of detail in this chapter, but these are the essential elements. And one of the first things, you want to do a gap analysis, decide where your organization is compared to potentially a standard that already exists, and see which one it more closely aligns to. So that gap analysis is going to be part of that designing phase. You're going to evaluate the internal and external environments. Again, understanding when we talk about internal within the organization of what are some of the risks associated with that, but then also externally, right? What's the environment? What's the political? What's some of the strategic issues that might be going on, or demographic issues, excuse me. We want to be able to integrate into existing processes. We don't want to create a new wheel. We need to identify a commitment of resources. We need senior leadership support when we start designing this, ability to communicate and reporting, and then finally monitoring and improvement. So you see some of these things are fairly similar to some of the other lists, and so you just have to make sure you identify which parts these fall into in these different areas. Chapter 6 dealt with risk identification. So what we basically did is once we identify, we're kind of going through the steps of how we go through risk assessment. So the first one's identifying. So we talked about techniques to identify risks, and then the pros and cons of each. Typically, the question you're going to see on the exam for this is, it's going to be asking which would be the best technique based upon this type of scenario. And it's probably going to be more associated with the case study. And you got to think about which one works, from the list when we talked about which one works best for different situations, right? Now, a facilitated workshop, that's actually probably be one of the better ones, meaning we're getting people together to talk, but it's also probably the most expensive and time consuming, or one of the more expensive time consuming. It's good to work on a problem or project to get different perspectives from different departments, legal, HR, those type of things. So facilitated workshop allows you to get a lot of input. The Delphi technique, if you can't do facilitated workshop, a Delphi technique is a good way, because you can email or send a survey out. You get responses from that first. Based upon those responses, you send out the survey again, or the questions, and say, here's the new information. Does this change your opinion of how you think about this risk issue? Scenario analysis is essentially what if analysis, usually for kind of more project-based or medium to large projects. HAZOP. So we talked a little bit about HAZOP, hazard operability study. Those are for really large, complex projects. That's where you'd want to use something. Hazard operability study is like the space shuttle, a nuclear plant, where failure is not an option, is typically where you use a HAZOP. And then SWOT, strengths, weaknesses, opportunity, threats. Again, what are the strengths and weaknesses of how you might want to use that. It's a simple technique to identify internal strengths, internal and external strengths and opportunities. Talk a little bit about risk registers and risk maps in this chapter as well. And you will probably see an example on a case study as well of identifying what would be some of the risks based upon a graphic that they might provide to you. You're not going to have to draw one. That's the good news. That's one good thing about multiple choice. Loss exposure identification. So in this chapter, we also talked about some of the techniques of how you identify loss exposures. Document analysis is one. So what documents would you look at? Budgets. You can look at, I'm trying to think, checklists, surveys, all those type of things. So think about the documents that if you went to an organization that might be able to tell you a little bit of a story. a compliance review, right? You can really, if you want to call an audit that was performed, that's somewhat similar to document analysis, but you can it be a compliance review by maybe an outside organization, and they would help identify some of those exposures. Personal inspections, best thing is to go out and actually observe what's going on, see the plant, see what, the fleet and the types of vehicles being driven, and do ride-alongs. Personal inspections is a great way to identify loss exposures. And then finally, expertise within and beyond the organization, right? So your subject matter experts, you want to leverage them, as well as, trade associations. All those can help an organization identify their loss exposures. Chapter 7. So Chapter 7, we deal with probability analysis. Right. So some of the questions that they deal with on probability, empirical versus theoretical, law of large numbers, and the expected value page that's on page 7.12, some of the discussions on there. This is the chapter that people typically do struggle with between Chapter 7 and Chapter 10, because it's dealing with math. It's not about explaining. The main thing you're going to have on there is basically, is be able to understand, there'll be a question with a graph most likely, and talking about what percentage within like a standard deviation, or when would you want to implement a program. And if you remember, the normal distribution and the rule, what I put on there is 68, 95, and 99, right? If you're operating at a 95% confidence level, what that basically means is you have 2.5% on each side that's outside that variance, right? It's outside that standard deviation, or not underneath the bell curve. And if you're doing 99, it's actually 99 point whatever. But these are just general rules of thumb to help you figure out the problem. And so just you want to take another look at that distribution, and probably just reread, if nothing else, do the supporting material, because there's problems that you would most likely see on the exam. Be able to understand the difference between on central tendency, mean, median, and mode, right? Mean being the average. Median is what's directly in the middle between all the different numbers, and the mode is the number or value that occurs most often. Decision tree and event tree comparison. I actually put this on the next slide as well. But you will have a question saying, what's the difference between the two? Again, it's one of the objectives that was listed for that chapter. And there'll also be most likely a question, a simple one, dealing with the probability of a decision tree, and it kind of goes through of what the, what would be the probability, and basically be able to go backwards on it. How you analyze loss exposures, right? Loss frequency and severity, total dollar losses and timing are some of the things you want to look at for loss exposures. And then finally, the Prouty approach is one of the items we discussed in there as well. So again, with all those chapters, you figure these as 30 pages, each of the chapters. Here's just the core elements you want to focus on within that chapter. So this is the decision tree analysis versus the event tree, and it gives you, function, use, when would you want to use it. Again, this is an area that I would, highlight and focus on. What are the differences? Typically, what I focus on is the advantages and disadvantages of each. That's typically where we see questions on the exam. We're dealing with advantages and disadvantages. Chapter 8, this is the shortest chapter in the book. I think it's only 11 pages, right? So the techniques, when we talk about treating risks, we can avoid it, modify it, transfer, retain, or exploit, right? When we talk about transferring, we're really talking about insurance, having, we can also transfer through a contract or hedging. And then there's a brief discussion on risk retention, right? Planned and unplanned, complete or partial, funded or unfunded. And so if you do get a question about funded and those type of things, again, think about 50,000 foot level. It's not going to go into great detail, but if you're a risk manager, you would probably want to have a planned retention, right? Because you don't want to have, it means you have a budget, you're planning for it. As far as risk retention, it's complete or partial, right? Are we funding all the risk, or is it complete? Are we transferring some through insurance, those type of things? That's what we're talking about, risk retention. And then funded or unfunded, right? Meaning essentially, are we going to have an escrow account? So we're going to pre-fund it, or we can do a pay-as-you-go type thing. Oh, that's right. When I talked about planned, unplanned, I messed up there. Planned and unplanned deals with, do we know that we're actually retaining the risk, right? If we know that we can't buy insurance, or it's too expensive and we decide not to buy it. That's a planned that's a planned retention that we're going to retain the risk. Whereas unplanned is we didn't even know the risk existed. So just want to make sure I corrected myself because I used the funded or unfunded in that piece of it. So whereas funded or unfunded is developing that escrow account for it. All right, chapter 9. This is one of the newer chapters as well that the Institute's added about a year and a half ago. And where this is dealing with some of the big data characteristics was one of the first things that asked the educational objective to be able to explain. And some of the characteristics when we talk about big data now is the volume, right? The amount of data that we're able to collect, the variety of the different types, the velocity, how quickly we can obtain it. Talks a little bit about veracity and value, right? I have to go back on the veracity part, but it's what we're really talking about there is kind of how good the data is, I guess, is really what we're talking about. We talk about veracity and then the value. Does it actually add value to what we're trying to analyze? So structured versus unstructured data, focused on that, external versus internal as well. The structured data, meaning how it's coming in. And again, external versus internal. Is it coming from a third party source or are we collecting that data? And again, it just kind of talks about all these different elements when we talk about how we use that data to manage risk. The two approaches to data-driven decision-making, be able to understand the difference between descriptive and predictive approach. The descriptive is applied to a specific problem, and it's really not used for any other purpose beyond solving for that specific problem. Whereas predictive, we might use, talks about providing a method that can be used repeatedly by humans, computers, or both, right? We're trying to use it. We're trying to figure out what it can tell us. As well, when we talk about predictive, and it talks about also part of the method is the frequency of the data. How often are we getting it? In order to be predictive, if we only get it once a year, it may not be that good. So it's about the volume and the velocity of that data. It will help from a predictive approach. Some of the definitions that includes on this chapter: predictive model, training data, target variable, overfitting, holdout data, accuracy versus precision, recall, and F-score. The one that I typically, if I remember correctly, that you'll probably have a question, actually has to deal with training data, and also probably a little bit of discussion about overfitting and holdout data are typically the areas where I've seen questions in the past. And then some of the different analysis techniques, supervised learning, where you have a target variable that's defined versus unsupervised, which is just the opposite. Target is not defined. There's exploratory, segmentation, and association rule learning. I wouldn't expect much questions on that. It's a little bit, again, part of the reason why is that you're, with 11 chapters and 75 questions, there's only so many questions they can ask in each chapter. But I would expect, when we talk about traditional techniques, that you have classification trees, regression models, and cluster analysis, and the new techniques are text mining, social network analysis, and neural networks. So there may be questions of the comparison between the two there. When we talk about the category, structured versus unstructured data, this is actually, again, charts being a good way to learn, to be able to explain, and it puts it into nice, matrix for you. The structured external data, telematics, financial data, labor statistics, whereas when we look at internal structured data, it might be policy information, claims history, and customer data, and so on and so forth. You can see even, on the unstructured internal, the surveillance video, we're collecting video. It's internal, right? We have that video, but it's unstructured because it's not coming in a standard format. It's just kind of all over the place, and we have to organize it. Again, some of the techniques that it talks about, traditional data analysis techniques and how it kind of helped lead to business solution. And then we have the new data techniques and text mining that really we're combining these two different techniques to basically help with business solutions. And then this is for the predictive, the tree for predicting complex claims. And this is really kind of that decision tree as you go through about claims being reported and how you basically go through. It's just another example that they provide in the textbook that I think could help explain They'll help you understand the material, and then also when you get a question, by understanding this, you should be able to answer the questions without a problem. Chapter 10, not that long ago, 2 weeks ago, capital investment and financial risk. On here, the only thing I can say is practice the problems, right? Know and be able to calculate present value of a future payment, be able to calculate present value of an annuity, and be able to evaluate an investment proposal. You will have a problem, a case study similar to what we practiced that we showed on there, and then I gave you practices within the study material. You will have a problem where they'll provide you a case study, and there'll be some information in there that's data that's not useful. That it's just kind of red herrings information, but at the same time, you'll probably have 2 problems to solve within the capital. You'll need to do the investment proposal, but then you'll also have to calculate, present value of a solution of whether it's, makes financial sense. Then chapter 11, right? The main things that really focus on this last chapter that we just talked about last week is understand the rules of risk and audit committees. That's where we've seen the most questions on, and really understand when it talks about the differences between the two. The role of internal audit, how is it different from internal controls, and then what should risk management reports contain. We talked a little bit about that as far as, at the different levels, how often the data is reported, all those kind of things. That's where you're typically going to see most of the questions on. So we've actually gone through all 11 chapters in probably about 45 minutes here or so, or maybe almost an hour. So I hope you found the course beneficial. I do encourage you that as you complete your studies and you're preparing for the exam, if you do have questions, you can email me. You can use the contact page on the website as well. And if needed, based upon the type of question, a lot of times I'd like to actually give you a call. And so if you want me to give you a call, go ahead and include your number and the best time to call, and I can see if I can help you out. And we can even do a video conference to help you out. So just because the course is over does not mean that you don't have additional help if you need it. And if you're struggling with a portion of the chapter, one chapter needs some additional help, those type of things, I'm happy to walk you through some of the content there. So with that, I want to thank everyone for participating in the course and wish you luck with your studies. Thanks and have a great evening.